Hey traders, the Chart Guys Swing Report newsletter is currently live. In the description of this video, there are two links. The first is to the sign up page where you can also get emailed an example of a previous copy. And the second is to an in-depth video to let you know exactly what the Swing Report entails. Appreciate your attention. Let's get on to the charts. Hey traders, checking in on the broader market. So the bottom line is bears didn't prove it. Obviously with a big green day and SPY just closed at the highest level that we've seen in over a month. That is no bear follow through. So I'll walk through what we were looking at first thing this morning, and we'll look at first the S&P 500 futures chart, because we were watching, as I said in the video yesterday, can we see an hourly lower high and lower low overnight for the bears to prove it? The answer was no. They did not. Ooh, there's the drawing still right there. They didn't prove it overnight, but they came out swinging when the bell rang. Granted, the bears made an attempt. They tried. Here's a 4-hour bear flag, weak 4-hour bounce, bell rang, we did drop to a lower low. And then of course a rocket ship. So what are the four things that I needed to see bear conviction on the morning? I needed QQQ to break its low of yesterday, XLF, XLV, and oil. We've been watching oil correlation. I want to see oil weakness. If I'm going to be a convicted bear, not going to prison, but a bear with conviction, I need to see those things happen. So what ended up happening was, first things first, oil did not follow through. So again, here's the 4-hour lower high and lower low on the S&P 500. Oil, we had a 4-hour lower high. We came down, held the low, and V-shaped bounce. Let's look at it on the hourly. The low of the morning was 39.07. Here's our pre-market bounce. Heading into the open, and at the open, we dumped back down to support, held it by 6 pennies, V-shaped recovery. No oil weakness, no check mark for the bears following through. We did not drop to a lower low on the morning. That's note number one. Note number two is we need to see our three major sectors with a break of the low of the day, the low of yesterday, first thing. Now, the way it played out, yes, all three broke their low of yesterday, but it was not at the same time. We know the market is its weakest when everybody's at the low of the day at the same time. We had some mixing and matching going on and some tag team action. Let's zoom in real close because the first 20 minutes were very telling, and I could tell, at least on my end, I wasn't going to be a convicted bear today after the first 15 minutes. And the reasoning was, so first things first, how does QQQ start the day? It starts the day with a gap down open. It was our weakest sector heading into the morning. But look at the first 15 minutes. The first 15 minutes, a very significant bounce. So QQQ up for 15 minutes and then a dump to the low of the day. Now, during this, I was live streaming during this time and I'm saying, nah, bears aren't proving it. And as soon as this happened, I said, uh-oh, am I about to be very wrong? And in the end, no. And I'll show you why. So 15-minute bull move, 10-minute bear move, new low of the day. If all sectors were hitting the low of the day at this point in time, the S&P 500 would have dumped. But during this point in time, XLF. First 15 minutes, QQQ's going up, XLF is pulling back for 5 minutes. Maybe we'll call it 7 minutes, we'll say. So weakness for XLF, strength for QQQ. So QQQ tops out right here and then starts dumping right here. QQQ going down, XLF bull break to the high of the day. They were doing inverse things, and at no point were they both dropping dramatically to their lows at the same time. So there was a buoy effect. QQQ held up while XLF dumped, and then XLF bounced significantly while QQQ dumped. And as a result, how did SPY start the first 25 minutes? There's your bull move with QQQ. There's your bear move with QQQ. So clearly, the tech sector has more weight as it's very correlated to the tech sector, but we did not see any significant downside from that point. The new low of the day did not get notable bear follow through because the financial sector was holding on just fine. And that's where we started to see the momentum shift a bit. So here's SPY hitting the low of the day, bouncing, holding the low of the day by 33 pennies, where QQQ broke the low of the day there. It saw another lower high and lower low. So why didn't SPY? Because at that point in time, XLF was extremely strong relative to our other sectors. And at that point in time, let's look at XLV. What was it doing? Not a whole lot on the morning. It wasn't a major factor. It was similar to QQQ in its 15-minute bull start, 10-minute bear drop, no new low of the day. After the first few minutes, XLV did not hit a new low of the day again. So all of those clues, little small clues, as a skeptic of bears in this market overall, they didn't prove it to me. And I exited my Tesla swing, which was looking very ugly to start the morning. Fortunately, an S&P 500 drop in pre-market brought the bulls back down to earth, and I exited, I think, in the 1470s. I played a little bit of Tesla today. Overall, today, I probably had 10% as many trades as yesterday. So Tesla, I probably had 50 plus trades yesterday, and 50 orders, I should say, as I scale in and out. And today I maybe had 5. And that makes sense. That's exactly what you want to see when the chart ends up looking like this. Huge volume, huge volatility, huge opportunity, way less volatility, way less opportunity, way less trades. That's exactly what I want to see. So today was not a notable day for me, and I did a lot of sitting on my hands after the morning. I had a small loss on the swing, small win on a reshort, small loss on a bounce attempt, and small win on the day, but nothing notable. So, bigger picture, anything above 310, 68 was a daily higher low, and the bulls are hoping that 312 is a new daily higher low. So now my focus is going to shift on the tech sector earnings reactions. And bears need more than one day. We know that much. We had 2, 3 bear days here. One day will not cut it. IWM. So IWM on the daily chart is still in its tightening 2-day range. I like the 2-day time frame for clarity. High, low, lower high, higher low, lower high, higher low. The range that I care about, 145.70 resistance, 137.24 support. If neither of those ranges breaks, I don't care what's happening, because it tells me it's just sideways. One of those levels has to break, and that will be notable in which direction that it does break. QQQ. So oversold bounce took place. I was looking for an oversold bounce entry because I know if the hourly RSI, which was down in the mid to low 20s at that point, knowing we are looking for a daily higher low in the tech sector, I was looking for a bull entry, and I didn't get a setup that I liked. If I wanted to be really aggressive, I'd be scaling into the all-out dump and the falling knife. But the last thing I want to do is give back my 2-week maker from yesterday on Tesla, and I decided to be more conservative. So what I was looking for was a setup for a 5-minute trend change to see our hourly oversold bounce take place. In an ideal world, I would have seen a rejection from this little resistance of 255.85, a higher low form. I would have entered on the 5-minute higher low. I would have put a stop under the low of the day, and we would have seen nice bounce follow through. In the end, we just V-shaped, and the trade ran away without me, and I said, all right, wasn't the setup that I wanted. Trade didn't come to me. Done for the day. No biggie. So in the end, hourly oversold bounce takes place. As we know, hourly oversold bounces after massive bull runs when looking for daily higher lows generally give good returns, and QQQ did not disappoint. 4-hour time frame on a lot of tech names. If we see bull action tomorrow, we're looking for 4-hour lower highs. High, low, anything under 269.79 is a 4-hour lower high. I'm going to be watching for tightening 4-hour ranges. It's not crystal clear on all of these names, but pretty much I'm watching the range, high of yesterday, low of today, and looking for a lower high on this bounce compared to the high of yesterday. And that's the case for Amazon, for Apple, which has much more bounce follow through, but still watching for a lower high compared to 400 initially. Netflix, looking for a lower high on the 4-hour compared to 575s, although earnings are approaching, and that's going to be the determining factor. Google, same thing, looking for a lower high compared to 1576. So it's going to be hard for me to be bullish. The tech sector, if green tomorrow, I'm going to be scouting for potential 4-hour lower highs. But bigger picture, QQQ, trying to set this daily higher low very quickly, and I expect to trade within the range of these 2 days, maybe for the rest of the week. We'll see what volume looks like, but it's a very wide range. Expanding ranges are when we pump the pedal to the metal and see lots of trades and are very active. And then constricting ranges from that point forward, we pump the brakes, we trade less, and we wait for this break in volatility again. So the volatility spike happened, and now I'm expecting that volatility to shrink. Healthcare. Completely disregarding that ugly candle from yesterday and right back breaking 103.22. Daily higher low, double top, no loss of the daily higher low. Bulls back in complete control and looking at 104.22, the COVID bounce high. Financial sector. So financial sector is trying to change the daily trend. This was a lower low drop. It was a bear break with no bear follow through. Bull break of the lower highs, quick little higher low, and if we can see some bull reactions to the rest of the financial sector earnings that we've got coming, a break of 23.91, we can call that a quick little daily trend change, and that will convincingly set our weekly higher low. And if you're watching airliners, cruise liners, gaming, hotels, you want to see these weekly higher lows set because this is the XLF chart. Let's look at the airliners. Trying for the weekly higher low, not as strong. Let's look at some cruise liners. Trying for the weekly higher low, not as strong. Let's look at some gaming names. Trying for the weekly higher low, not as strong. And they need some help. And let's see if the financial sector bulls can give these laggard sectors some help. I'm not interested in the laggard sectors right now myself, but it's worth watching to see if the bulls can hold the low of consolidation and see the weekly chart try and get some bounce follow through like XLF is attempting to do right now. Biotech bulls, anything above 108.43 was a daily higher low, and we bounced $1.30 change above that level. So daily higher low set. Bulls need a break of 118.36 to see a new all-time high. Let's look at the 4-hour. I would be scouting a 4-hour lower high compared to 118.36 if we see some green first thing tomorrow morning. Same as the tech setup. SMH, significant bounce, daily uptrends intact. And again, same thing, 4-hour time frame. Let's see if we get a lower high compared to 164.05 and tightening 4-hour range into the end of the week. The VIX. So did see some bull follow through to start the day, but gave it back and closed near the low of the day. Obviously not what the volatility bulls were looking for. So weekly higher low is set, and we certainly need more follow through than that for any chance of a weekly trend change. Most important level for me is 26.10. If 26.10 breaks, bulls of the market are back in complete control, and the volatility bears will be back in short-term control. For UVXY, the most important level for me is 29.58 short-term. Gold, looking just fine for bulls. So we had a 4-hour bear break, 17.94. We broke it with no bear follow-through, straight into a bounce, which means zoom out and look for a potential bull flag. And you could call this still a potential daily bull flag, daily 12-period exponential support, healthy higher low, and we're just looking up at 18.18 as resistance. We need 0.5%, I should say, 0.5% for a bull break to continue this daily uptrend. And again, there's no fear in the market. It was brief fear from yesterday, and it was not a good sign that gold was reacting to that, but it didn't last long at all. Silver, daily inside bar, but still very strong here as well. If the inside bar breaks bullish, we're right back up at 19.38, the high of this move. Bottom line is precious metal bulls still have complete control at this point. Miners, big bounce. Broke the low of yesterday first thing, no bear follow through, but look at the 4-hour chart. Key resistance of 39.18. If we reject from that, it's a 4-hour lower high, and we'll look for a tightening 4-hour range, but significant bounce and still a daily uptrend, just like the precious metal daddies of the miner sector. Oil held the low of pre-market first thing this morning, and a big bull break took place, which is keeping the daily uptrend alive. Anything over 37.08 is a daily high or low. And the bulls are just fine. High, low, lower high. Trying for this to be a higher low. I need a bull break of 40.72 for me to say, yes, that's our new daily high or low set. And then we'll be looking right back up at resistance. Natural gas looking for a daily high or low to form, but no sign of it yet. 4-hour bounce. Need a 4-hour trend change for the daily high or low to be established. It's worth scouting for that daily high or low, but it has not formed yet. And the burden of proof is on the bulls to shift this 4-hour momentum back in their favor. So, I'm pretty much back to fresh, clean slate heading into tomorrow. And I do have a little bit less clarity on a lot of these names' shorter-term time frames. Even SPX 500 USD. So I look at this chart, and I can see daily uptrend, absolutely. Just forming a higher low. Bears did not lose the uptrend, so they didn't prove anything to me. 4-hour chart. I don't like this little lower high, lower low break of resistance as far as clarity is concerned. Hourly chart, we had a little quick bull flag and then a bull break. But bottom line is, I'm looking for a lower high compared to the high of yesterday and to tighten up within that range for another day or two. And then we'll take it from there. But the bottom line is bulls still have full control. And we're now shifting our sights into next week as we start to look to tech sector earnings with Netflix this Thursday. But I've been noticing recently over the last year plus that the tech sector as a whole has not been reacting to Netflix earnings as much as I remember from some previous quarters. So I don't think it'll be as significant an event. So that's where we stand. We'll see where we open tomorrow. If it's a higher open, I'm watching for 4-hour lower highs. If it's a lower open, we'll be watching lows of today's key support. Hope you had a good day. It's fine to protect bullish positions, to enter bearish positions. What we do not want to do is be convinced that this is it. And not, every time I enter a trade, the first thing I think of is if I'm wrong. The first thing every single time. What happens if I'm wrong? What is my risk if I'm wrong? And when you enter a trade and that's not in your mindset, and you're right, and this is what's going to happen, and this is going to be the dump, that's when you get into trouble because you don't have a plan. Have a good day. See you soon. These are dill flowers. The watermelons are going wild. Some classic carrots. So as an example of how much food you can grow in a small amount of space, this bed is maybe 4 by 12 going down to where the carrots are. And this is just a fraction of the amount of beets I've already taken from here. And you can see how much is left. This was maybe less than 10% of what you get in that amount of space. Grow food.